Hello traders and welcome to another video review. Today is Friday, May 3rd, 2024. Let's find out what's going on the Forex economic calendar today. Not too many important data overnight. Only the home loans from the Australia beats the expectations of 1% with the actual reading of 2.8%. Then we got the London session. As you can see, data from the UK are scheduled for this at 10:30. Composite PMI and the services PMI. Market participants expect increase in both in services and composite PMI. Eurozone unemployment rate is scheduled for release at 11 o'clock. Market participants expect this unemployment rate to stay at 6.5%. During the New York session, we got very important data release. First off is non-farm payrolls, NFP day today. Market participants expect the non-farm payrolls to decrease from 303 to 238,000. Average hourly earnings, participation rate, and unemployment rate. All of this data are scheduled for release at 2:30. Together with, of course, non-farm payrolls, so very important data here. Then what we have is the S&P Global Services PMI from the USA, scheduled for it at 3:45. Then we got ISM non-manufacturing PMI data scheduled for this at 4 o'clock. Then we have the US Barker Hughes oil recount and the total recount. So the New York session is all it is all about for today, because of the very important data releases together with the non-farm payrolls and the global and manufacturing PMIs. So please stay focused, stay vigilant. Let's just go and do the technical analysis for all of the US dollar related markets. We start with euro dollar as usual. So the euro dollar is clearly locked. The euro dollar is clearly locked between two levels, between basically two zones. It's still locked below the trend line, that's obvious, but if you can see here that the local high, of course, is 1.0753, and the market is locked below this this local high. The bulls are trying to move higher, but they are doing this from the bottom of the demand zone. So they go from the supply zone to the demand zone, back to the supply zone. Possibly now they will be going to the demand zone again, because the data are scheduled at 2:30. There is plenty of time for the market participants to do this move. As you can see, momentum is strong. It's roughly below the level of 60, 58, 59 points. So this is a strong positive momentum, and because of this recent bounce, the bulls are in charge of the market. However, it doesn't actually mean we will see a breakout higher. This breakout might be indicated if the data from the US will be way weaker than the expected. Then, of course, what will happen is the market participants will see the weakness of the US dollar across the board. So the euro dollar will go higher. So people, traders, investors, speculators will be buying euro and selling US dollar as the immediate reaction on the way more expected, way more worse than expected data from the US economy. Plenty of this data is scheduled for release later on, as we know, right? So for now, I don't actually think that there's something happens until the data will be released. Then, of course, two scenarios, both for the weaker or stronger dollar. For now, the chart favors breakout to the upside. So that was the euro dollar. Let's find out, of course, the US dollar to the Japanese yen. We have to do it because this is the pair that reacts very often on the US data. However, because of the recent double intervention of the Bank of Japan, this leg to the downside was even extended. Nevertheless, what I think is going on is that this correction will get complex and more confusing, which is why ABC stays here. Let me just apply to you much more complex and time-consuming pattern, which is, of course, Elliott double combo. Okay, so this was the high ABC, that was the wave W. Now we have the wave X inside. What will happen now is the ABC to the downside. For example, It can be any pattern, but what can happen is the ABC to the downside, which is why the outlook for the US dollar to the Japanese yen is bearish. And that's not because the outlook for the US economy is wrong. It's because of the intervention, double intervention of the Bank of Japan when the US dollar versus the Japanese yen hits the level of 160 and above. Okay, so that's why all of these levels here, as you can see, the one that we talked about yesterday, are now becoming the technical resistances, and this is very serious right now because we are down. Let me just find out the price range. We are down from the top to, let's say, last bottom 4.5% within I don't know, a week or something. So minus 4.5%, extremely oversold market conditions. Nevertheless, it doesn't actually mean the market will bounce straight on up towards 160. We might see some sort of the confusion here, maybe some fights between bulls and bears. Nevertheless, the corrective cycle to the downside continues. This is the biggest cycle, as you can see, in terms of the time and the price, which means the uptrend might have been completed, and now it's time for the bigger correction. If this correction goes way lower, the last thing that you need to do is to place Fibonacci retracements. Yeah, so let's do it right now. We will do it this way. We will apply it to this high, and we will apply the other level to this low. What's happened? We broke below 38%. We broke below 50% of the Fibonacci retracement of the last swing to the upside. Okay, so the 50% has been tested here. Then there was a reaction, so there was a bounce. Let me just zoom it in for you. So there was a bounce, but now we are heading towards 61%, which is even below the technical support, and this 61% is located at 151.74. Let me just place it for you. I will make it I don't know, black line so you guys can see. Okay, and that can be a target for the wave Y as well. All right, so that's the situation on the US dollar versus the Japanese yen. Let's take a look at the US dollar index. Now, on a 4-hour chart, US dollar index is still bullish. It's still bullish, but recently it starts to test some levels. So the last level, let me just make it a little bit different. I need the magnet. There you go. So the last level we want to be hit is this one, 104.94. Why? Because if we break below this level, then of course we might see some bigger correction. 105.7 is the up of this demand zone, and we got very, very nice technical demand zone that it was made from two levels, two horizontal technical support levels. Let's add trend line. As you can see, this trend line worked pretty well, but I think we should get this trend line here and leave it like this. So now you can see that the market keeps bouncing from this trend line and tries to go higher. Momentum is negative, momentum is weak on the US dollar. However, remember, we are just above the key demand zone and just above the trend line. Of course, if you want to, you can lower the trend line like here to the extreme of this candle, and that's fine. So the point is, the price is still just above this demand zone and the trend line together. So intraday technical resistance for the intraday traders is 105.38. there is one more interesting technical resistance just a little bit above it at 105.44. Any breakout above these levels before the data is published might be bullish. Please notice that we are below 50 and 100 periods moving average, but they didn't cross yet. So as I said, this might be only some sort of the correction like here, and then spike to the upside. Correction, new high, correction, and then if history will repeat, we will see some other movement to the upside soon. Last but not least, the Bitcoin. As we expected on the 4-hour chart of the Bitcoin, we went from the 65,590 towards the demand zone, and the demand zone was violated with the local low at 56,480, and now it's being tested. Okay, let me just we won't switch the colors yet. Okay, we won't switch the colors yet. Let me just move it a little bit here. It was somewhere. There you go. It was somewhere here. We've made a new low. Let me just mark the new low as well. 56,480. Okay, so that will act as the local technical support and swing low into the extremely oversold conditions. Now we are bouncing up, but please notice that we are almost at the level of 50 on the RSI, and we covered just maybe 38% of the recent on this move to the downside. Market is definitely bearish. Market is definitely under the bearish control, and the key demand zone has been violated. There's this demand that was established on the March 6, 2024, and if we don't see any substantial reversal above the demand zone, above the 50 and the 100 periods moving average, towards at least 64 or even better $67,000, then of course this movement to the downside might be extended lower. The next target, I just have it, I forgot to tell you, but don't worry. The next target in that situation, 52,993. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.